The United States has a debt problem. That's the US public debt. It's what the US government owes to its creditors. It currently stands at almost $40 trillion or roughly 114,000 US dollars per American. That's a crazy number, but it's actually not what this video is about. Because there's another debt that is much less talked about, and I think it's just as interesting. It's what Americans owe to the rest of the world, the foreign debt. And the reason I want to talk about it today is this. That's the net international investment position. It plots what Americans owe to the rest of the world minus what the rest of the world owes to Americans. Until the financial crisis, it was relatively stable, and then it started collapsing. The United States is becoming more and more indebted to the rest of the world and at an accelerating rate. It's gotten to the point where if you divided that up evenly among all Americans, every American would owe roughly $81,000 to the rest of the world. Okay, but what's actually the meaning of this? Is there an impending crisis looming? Is the US hegemony on its way out? Should you start stockpiling canned goods, moving to New Zealand, learning Mandarin and buying Bitcoin? Well, it turns out the issue is actually much more subtle, and it's not even entirely clear this is necessarily a bad thing for Americans. But first, let me explain what actually happened. Okay, so this part can be a little confusing, so I want to start with an analogy. Imagine a person, let's just call him Uncle Sam, and he works as a salesperson. Every month he earns an income, but he also spends money on stuff that he enjoys. In fact, he might be enjoying things a little bit too much because every month he tends to spend a bit more than he earns. Now, normally this would slowly lead to a lot of debt, but Sam doesn't only have his income. He also has an investment portfolio that grows over time. And if his portfolio is doing well, he can more than make up for the deficit in his day-to-day finances. Okay, so this is very simplified, but the same dynamics apply to the foreign debt. The spending in this case is the US trade deficit, the thing that Trump is so obsessed about. And every year, somewhat famously, the US spends more than it earns. It imports more than it exports. And this gap is adding to the US foreign debt. This is the current account, which is basically just the trade balance of the United States. As expected, it's been negative for most of recent American history. This is the figure that most politicians and pundits focus on. But the interesting thing is this. Americans used to actually run larger trade deficits before the financial crisis than after. But their debt was not accumulating nearly as fast as it is now. Okay, so you probably see where I'm going with this. This is the part that's like the investments in our analogy. The value of what Americans owe to the rest of the world can go up and down depending on how these investments do. So, for example, when I buy stock in a US company, I buy a part of their assets and thus also a part of their profits. And since they now need to pay out a share of the future profits to me, a foreigner, the US debt, so what the US owes to the rest of the world, goes up. This is a debt to the rest of the world. And obviously the same goes for the other way around. So if an American buys stock in an EU company and that company does well, then this is a debt from the EU to the US, so it's basically a net asset for the US. This reduces foreign debt. And so if you make good investments, you can actually run a pretty large trade deficit without running up any debt. We call that valuation effects. And since basically everyone invests in the US and the US does invest a lot in the rest of the world as well, these can get pretty big. By the mid-2000s, foreigners owned trillions of American assets, but Americans also owned trillions of foreign assets. And crucially, the US was earning more on these investments than the foreigners were. That's partly because a lot of the international investment that Americans were making was risky investments, such as stock, while a lot of the investment that foreigners were making in the US were actually buying government bonds. So the foreigners were basically giving loans to the US government. Americans were in effect borrowing really cheaply and investing at a premium, and this allowed them to splurge on imports for a really long time. This didn't go unnoticed on the international stage. The French called this the Exorbitant Privilege, and the term stuck, and they were really not happy about it. So here's what Charles de Gaulle, who is probably the most famous French president ever, has to say about the issue. The fact that many states accept dollars as equivalent to gold in order to make up for the deficits of the American balance of payments has enabled the United States to be indebted to foreign countries free of charge. Indeed, what they owe those countries, they pay in dollars that they themselves can issue as they wish. And the thing is, he was pretty much spot on, right? The US was buying goods and assets from the rest of the world, and in return they sent dollars, which don't really produce a return as opposed to assets. So they were essentially just getting an interest-free loan. They were indebted free of charge, as he says. This was the exorbitant privilege. Okay, but how did this happen? How did this exorbitant privilege come about? So this is not going to be a history video, so I'll make this really quick. But basically, after World War II, a lot of countries decided to go back on the gold standard. But it wasn't the same gold standard as it was before. It was a weird gold standard. The dollar was the only currency that was actually pegged to gold. All the other currencies were simply pegged to the dollar. And so this made the dollar the anchor of the international monetary system. So even after the US abandoned the gold standard, so after you couldn't exchange your dollars for gold anymore, the US dollar just kind of remained the dominant currency. Central banks still kept all of their reserves in dollars, traders still did all of their trading in dollars, and if they did get rid of their dollars, it was usually to buy US assets such as government debt. And so the US, just being the default financial center of the world and just kind of being perceived as really safe, led to a bit of a strange scenario with the rise of Asia. Because as countries like Japan and South Korea and later China started to become manufacturing powerhouses, it kind of led to a scenario that went something like this. Asia makes stuff, the Americans buy the stuff, and whatever Asia earns from selling the stuff, they recycle back into the US dollar by buying US assets and US government bonds. By the way, if you ever hear the US dollar being called the boomerang currency, that's the reason for that. The term was, by the way, also coined by another French dude. Anyway, so that's the history, but that sounds like the US is getting a really good deal, right? So what went wrong? Well, it was a combination of two things. The first one is that US companies started booming. This is the enterprise value of American corporations. Roughly, it's what you'd pay to buy an entire company. That means every factory, every patent, every contract, but also every loan. Basically, it measures how valuable a company is as a profit-producing machine. American corporations started earning insane profits after the financial crisis, especially in tech, and you can clearly see that in the enterprise value. Crucially, this was only happening in the United States. Here are the enterprise values of companies in other parts of the world. Clearly, the United States is a huge outlier. Good news for America, right? Well, on first glance, yes, but here's the twist. Remember, before I was saying that foreigners were mostly investing in US bonds and US dollars? Well, that kind of started changing at some point in the 2000s. As the rest of the world started catching up economically to the United States, their appetite for riskier investments grew. And so they started investing in stocks as well. And America, being the financial and economic center of the world, made their stocks a really attractive investment. And so when after the financial crisis American stocks tripled in value, a huge chunk of that gain actually did not go to Americans, but to foreign stockholders and investors. When you include foreign direct investment in the calculation, a whopping 40% of the US stock market is actually owned by foreigners. So thinking back to the Uncle Sam analogy, this means that all these valuation effects that used to be large and positive started becoming large and negative. So much of the US boom was being owed to foreigners that the resource that kept the US afloat for so long was now becoming a burden. So at the start, this might have sounded like a positive thing, but now it's not so clear anymore, because after all, American companies are booming, but a lot of the gains are not flowing to Americans. So what's the takeaway here? To be honest, it's kind of complicated. And I think this is also the interesting part about this whole topic, because it really depends on why American companies have become so profitable in the first place. One possible scenario is that American companies are more profitable because they've innovated so much, and so the American economic pie is growing. True, a large share of that growth is going to foreigners, but that's kind of only fair because the foreigners were funding a lot of the innovation that was needed for the growth in the first place, right? And so in this scenario, even though they have a lot of debt now, Americans are pretty much unambiguously better off. Yes, they have to share some of their absolutely massive gains, but the majority of the benefit still belongs to them. But the slightly gloomier scenario is that American companies have not become more profitable because they have innovated, but because the American market has become less competitive. This means corporations have gained the ability to increase prices, not by providing any more value, but just because there's just less competition to punish them for it. And so the economic pie might not have grown as much as is maybe indicated, but it's more that corporations have just learned to extract more value. And if the pie is the same size and corporations get a larger share, this means that American workers are getting less. So basically, it's a transfer from American workers to American corporations. And because American corporations are to such a large degree foreign owned, it's even worse than that, because it's a direct transfer from American workers to foreign investors. Not great. The problem is, it's really hard to measure or to otherwise tell which one of these it actually is. It might be a bit of both, to be honest. If you guys have any ideas or you know of any research that looks into this, I'll be super interested if you could tell me in the comments. But whatever the reason, I think this has some really interesting and kind of less talked about and less considered implications. There's like a ton of policy that is indirectly or directly influenced by this. Like, think for example the Trump cut to the income tax. Usually this is kind of seen as gain for entrepreneurs and wealthier stockholding Americans. But in this context of a 40% foreign-owned stock market, for example, this can also be seen as a direct transfer from American taxpayers, because now there is less tax revenue, to foreign investors, because they get to keep more of their profits as it's not taxed in America. Similarly, if the tariffs actually end up hurting companies and not just consumers, a lot of the costs there will also be borne by foreign investors. So it kind of just adds a more interesting dynamic to a lot of these policies. What seems clear is that the free lunch that America seemed to be experiencing was maybe never quite as free as people thought. American companies are more profitable than ever, but undoubtedly American workers are also seeing a smaller and smaller share of those profits, and international investors are seeing an ever-growing one. And it's kind of shocking to me how little that ends up being discussed, so I hope I could raise some attention to this. Anyway, if you found my video interesting, you might enjoy my video about the growing gap between the US and the European economy, and why the reality behind it is not as simple as the numbers might suggest.